Hey guys, welcome to OSO Trading, where we simplify options trading for you. If you're looking to learn a new skill set or expand your trading knowledge, you've come to the right place. Today, I'm kicking off a brand new series, Introduction to Options Trading. In this series, I'll break down everything you need to know about options, from the basics of call and put options to advanced strategies that can help you manage risk and maximize returns. Now, I know at first, options trading can seem very complex, especially if you've never done it. But don't worry, I'll be here to guide you every step of the way of the process, whether you're a beginner or you're just looking to refine your skills. This series is designed to help you become a confident and successful options trader. If you find this content helpful, make sure you hit that subscribe button and click the bell icon so you never miss an update. Give this video a thumbs up if you're excited to learn about options trading, and let me know in the comment section what topics you'd like for me to cover next. Alright guys, so here's a quick look at what we're going to be talking about today. We're going to go over what are options, the type of options terminology, benefits of trading options, risk of trading options, psychology of trading, developing a trade plan, paper trading, and common mistakes to avoid. First up, let's answer a fundamental question. What are options? So, what exactly are options? Options are financial instruments that give the buyer the right, but not the obligation, to buy or sell an underlying asset at a predetermined price and date. They are versatile tools that can be used for hedging, speculation, and income generation. Now, I know this may sound very complex at first, but stay with me. Let's look at an example. Imagine you're interested in a company called ABC Corp. Currently, ABC Corp stock is trading at $50 per share. You believe the stock price will rise in the next few months, but you don't want to spend $5,000 to buy 100 shares right now. Instead, you buy a call option. This call option gives you the right to purchase 100 shares of ABC Corp at $55 per share anytime within the next 3 months. For this option, you pay a premium of $200. Now, if ABC Corp's stock price rises to $70 per share within those 3 months, you can exercise your option to buy 100 shares at $55 each and then sell them at $70 each, making a significant profit. On the other hand, if the stock price doesn't rise above $55, you can choose not to exercise the option and only lose the $200 premium you paid. This flexibility is what makes options a powerful tool in the financial markets. There are two main types of options: call options and put options. Each type serves a different purpose and offers unique opportunities for traders. A call option gives the holder the right to buy an asset at a specified price within a specified time period. You're anticipating that the price of the underlying stock goes up, as indicated by the green arrow. In this example, on SPY, we got into calls on the first 5-minute candle to make a new high and a break above the non-exponential moving average, with a profit target of around $515.75. Now, I know that sounded like a whole lot. You guys might not be there yet, but just stay with me. Because I'm in calls, I'm able to profit from this move to the upside. Now, I get a little bit more in depth with this trading strategy in later videos. On the other hand, a put option gives the holder the right to sell an asset at a specified price within a specified time period. Investors buy put options when they expect the price of the underlying asset to decline. In this example, on SPY, I noticed price rejection to the downside following a huge move up, as well as a long bearish wick candle. I entered puts to anticipate a move to the downside towards previous support levels near $504.75. Before we go any further, it is crucial to understand some key options terminology. Terms like strike price, expiration date, premium, in the money, and out of the money are fundamental to grasping how options work. I will cover these a bit more in depth in future videos. Options trading offers several benefits, including leverage, flexibility, risk management, and the potential for significant returns. However, it's important to balance these benefits with the associated risks. Speaking of risk, options trading can be complex and involves the potential for substantial losses, including the loss of the entire premium paid. It is essential to understand these risks and develop strategies to manage them effectively. Next, you want to understand a little bit about the psychology of trading. You want to maintain discipline and manage emotions for successful trading. Click on the link in the description if you want to listen to this free audiobook version of Trading in the Zone, if you want to learn more about the psychology of trading. A solid trading plan is key to your survival in this business. Before placing any trade, it is important to set clear goals, define your risk tolerance, and establish rules for entering and exit every single trade. This will be covered in depth in future videos. Paper trading. Practice trading with virtual money to build your skills without risk. This is very important, especially if you're using a new trading platform for the very first time. One of the best ways to learn trading without risking real money is through paper trading. This allows you to practice and refine your strategies and also validate to see if your trading plan that you created even works in the first place. You can do all this while you're in a simulator environment. No risk to you, just learning. Options can be a very powerful tool, but it's important to avoid common pitfalls that can lead to significant losses. Let's go over some of the most common mistakes beginners make and how you can steer clear of them. Mistake number 1, over-leveraging. One of the biggest mistakes new traders make is over-leveraging. Options provide leverage, meaning you can control a larger portion of a position with a relatively small investment. However, this can also lead to a large loss if the trade goes against you. You want to always be mindful of the risks and never invest more than you can afford to lose. Mistake number 2, ignoring market trends. Successful options trading often involves following market trends and making informed decisions based on technical and fundamental analysis. Ignoring these trends can lead to poor decisions and poor trading. Always keep an eye on the market indicators and news that might affect your trades. Mistake number 3, lack of a trading plan. Going into options trading without a clear plan is a recipe for disaster. A well thought out trading plan helps you stay disciplined and make objective decisions. Your plan should include your trading goals, risk tolerance, entry and exit strategies, and rules for managing your trades. Mistake number 4, overtrading. Overtrading is a common issue, especially for beginners who are eager to make profits. However, trading too frequently can lead to increased transaction costs and emotional fatigue. Stick to your trading plan and only take trades that meet your criteria. Mistake number 5, neglecting risk management. Risk management is crucial in options trading. Failing to set stop loss orders or not diversifying your trades can lead to substantial losses. Always have a risk management strategy in place to protect your capital. This might include setting stop loss orders, limiting the amount of capital allocated to any single trade, and diversifying your positions. Mistake number 6, not understanding the Greeks. The Greeks, delta, gamma, theta, and vega, are essential for understanding how your options positions will behave under different market conditions. Ignoring these can lead to unexpected losses. Take the time to learn about the Greeks and how they impact your trades. I'll cover this a little bit more in depth in future videos. Mistake number 7, emotional trading. Letting your emotions drive your trading decisions can be detrimental. Fear and greed can cloud your judgment and lead to poor decisions. Stick to your trading plan and remain objective, even when the market is volatile. By being aware of these common mistakes and taking steps to avoid them, you can improve your chances of success in options trading. Remember, the key is to stay informed, disciplined, and always manage your risk. And that wraps up Introduction to Options Trading. I hope you found this video helpful and that you now have a better understanding of what options are and how they can be used in trading. Remember, option trading offers great flexibility and potential, but it also comes with risk. Always make sure you do your research and practice with paper trading before taking on any real trades. If you enjoyed this video, please give it a thumbs up and share it with your friends who might find it useful. And also, don't forget to subscribe to my channel for more in-depth tutorials and tips on options trading and investing. Thanks for watching. Happy trading. See you in the next video.
I need that money.